I'm Blake Janover, and I'm here with my good friend Moses Sternstein, who's a bit of a polymath, certainly smarter than me, and goes really deep on the data. So he has all of these models and all of this data on all the things that I'm interested in, and I really don't know what his opinions are going to be. So I'm excited to be having this conversation. It's totally unscripted. He has no idea what I'm going to ask him because I'm that level of unprofessional. So Moses, maybe you could do a quick intro.
No, sure. Yeah, thanks, Blake. Thanks for having me. I reject all the accolades. I am neither smart nor do I go deep, nor do I have active models, but I do have, I'm curious about things, and I read far and wide, and I tend to get interested in big thematic things that that move markets at the margins, and I like capital markets, and I think that stuff is super interesting. And I don't know. And I strive to be as unprofessional as I can. So, I think that being unprepared is very much on brand for both of us. It's good.
We're nailing it.
Yeah.
So let me just get right into it. Purpose of life. No, better. Is inflation contained?
That'll cost you. Is inflation contained? I mean, I think I'm going to give you a cop at a yes and no. I mean, I think that. So the way I've thought about inflation from the very beginning, actually, so one of the first stuff that I started writing about was back in 2021 when inflation was still transient. I'm like, none of that makes any sense whatsoever. But I sort of see. First, I mean, the first thing that I like to say is that it's not inflation; it's inflation, right? What it matters, which prices are going up and why. Rather than the kind of reflexive, like, oh, prices are going up, therefore we must, throw high rates at the problem. It's like, if you had a famine, food prices would go up. It would be very inflationary. I think if you said, well, we're going to raise interest rates in response to a food shortage, you would, wouldn't be a great move. The only point is to say that cause and effect matter. So I think like in the early going, the secular inflation piece, I think, very much was the sort of stimulus-driven consumption, right? Like there was just huge amounts of buying from lots of free money. People were just sitting around. Bit of a whipsaw effect where they went from buying very little to suddenly buying a lot. That was clearly going to, peter out as the stimulus money sort of, frittered and wasted, and as it eventually did probably a while ago. The other sort of, I say other horsemen of the inflation knocalypse was probably fairly short term, also transient, the energy stuff, where again it was a combination of consumption habits, like we weren't consuming a lot of energy early on, and all of a sudden we were, and combined with like some federal energy policies plus the war in Eastern Europe, all of a sudden there was very expensive energy. The third one I think was sort of the least transient is just the aging curve. It's just we're getting older as a nation, and that's putting the ratio of people who work to those who prime age populate, the ratio of the prime age population to everybody else is shrinking, and that's a sort of secular phenomenon that's been going on all across the OECD and the US too. It just sort of puts secular pressure, upward pressure on wages and therefore prices. And it was certainly exacerbated very, early on in the pandemic. So it was a sort of a secular trend meeting a temporary shock, which was, of course, like people just exited the workforce en masse. A lot of them, early or unexpected retirees, and not just white collar retirees. Actually, that those were pretty much on trend. It was really blue collar retirees, in the sort of lower income service work, where there was sort of the most the tightest labor market. But so that was, I think, a less transient feature of inflation. I think the very acute part of it, which was really the last couple of years, that has pretty much, I think, predictably come down, right? And that was just really a question of saying, okay, if about 3 million people, I don't know if that's quite the right number, maybe it's somewhere around there, left the workforce, the supply of workers sort of contracted. It was really just a question of refilling that hole, and in however you want to measure labor market tightness, whether it's the sort of the ratio of job openings to available workers, getting that back to the pre-pandemic norm. If, I think at peak it was like 2 jobs for every available worker. Now it's closer to 1.2, which was what it was in 2019, and almost like in lockstep as labor market parity came back to normal, so too did inflationary pressure, especially in like the so-called non-core services, restaurant workers, retail, stuff like that. So to me, like, I think that part of it is largely kicked, at least on the acute side. The caveats is like, it is again a secular, aging is a secular problem. It's not we're still getting older, which means the share of people
I'm
who
not.
will.
I'm
I'm not
not. I
either. I'm
No, no,
I'm
no.
going the
I
other
did
way.
I did biomarkers, and I'm 4 years younger than I am than like I allegedly am. So
It's all the
want
zine. Yeah.
just an
So
FYI.
yeah, but
I identify I identify as 32.
as slightly younger. Yeah.
Yeah.
My dad has actually been making that joke for a long time, like before even identifying was a thing. He's
No,
just like,
no,
yeah,
no,
he's
no.
just been like,
I did it.
yeah, well, all right. It seems to have worked for him, but anyway, yeah. So I think like the questions are like going forward, like how do we solve this sort of secular labor shortage? Where there are just fewer people to work, a lot of older folks, a lot of consumption of healthcare. We do have like the areas that are most acute, are in healthcare, and that's what's been driving most of the jobs, and presumably those wages will continue to rise just because in sort of the big story around immigration, the open border has really been. It is real. It is significant, and it is it's contributed. It has helped keep. It's been pro-growth and deflationary, whether you like it or not. It may have some other trade-offs there too, but like that is the reality of it. And then of course the other big inflationary impulse is just the deficit, right? Because just like if you have, if everybody else gets chastened by high rates, in their borrowing habits, like the one person who doesn't is also the biggest borrower in the room is Uncle Sam, right? As you just have like as the deficit gets wider and wider, that's inflationary by nature, and yeah. So I mean that's also, and there's a longer question there of like how does that resolve? Um, do the borrowing costs just get higher and higher, or does the Fed capitulate and end up going back to quantitative easing, and which is pretty expansionary again, and so yeah, I mean, I think so. To come back to that, like, yes, I think it's kicked for now, in so far in a sort of predictable way. Like, I don't think there was any doubt about it. I think there are things that there's the sort of secular labor shortage, which I think will be persistent. There is the deficit, which will persistently push inflationary pressure upwards. Um, and then there's of course the question is, okay, what happens if we do lower rates and we go full throttle, and all of a sudden, demand for workers suddenly shoots off like a rocket ship, then does that then create the same wage pressure as it did before? I don't know the answer to that question, but like I think that's like an underappreciated thing for all the talk of the strong job. I like to say the labor market has been tight but not strong. Like everybody, oh, it's not created so many jobs. It's not really true. Demand for labor, in other words, if you add the number of workers, um, with the number of jobs, which is a proxy for demand, that's been relatively flat for about 2 years. The thing that's been playing catch up is been the supply, which is now basically all caught up. So there's an open question there: is like, can we even continue to grow demand? Are we going to create more jobs, so to speak? And what happens if we do? Like, do we need to keep bringing on more supply? And if we don't, does the existing labor force get more expensive and prices go up? Anyway, yeah. So I think I solved it. That's it.
So
Yeah.
you're saying inflation is contained?
I guess, yeah.
Yep. So I took a lot of notes here. The reason I'm looking away isn't because I'm on TikTok. I've got like a pen and a piece of paper. So this opened up a lot of things.
I have
And
intimacy
actually,
problems, so I just can't look at people in the eyes. That's why I look away.
I just think the left side of I think my profile from the left is better. So I have the pen, but there's no paper here at all.
Can I see the right side?
I no. It's horrific. Do, do you, I mean, outside of Argentina, all inflation is transitory, right? But so I wrote that down. I thought that was very funny. Next time, I'll give you a cue to laugh. Uh,
Okay, sorry. I'm not
no,
sure if
no,
it's
no.
true, but okay.
You're doing great. So you mentioned that, and I want to make the whole thing about inflation, but it's fun, because also it's not about inflation. It's about how the U.S. measures inflation, which is like proportions inside this like mystical CPI basket, and then it's how they measure, these things. Which some of it I think is unbelievably odd, like housing, but that's neither here nor there, and it's also kind of irrelevant what their target rate is because I think that's just a number pulled out of thin air. But you mentioned that having the open borders, where we're you know we're really big on, I'm going to politicize this. We're like really big on bringing in, um, I what I would call, like kind of randos, and we're like really big on not letting in like very smart, successful people. Like it's very difficult if you're successful and you have a business or you're an engineer or you're a scientist or a doctor to get into America, but you can sprint through the Mexican border. I digress. So you said that it's fundamentally deflationary, right? Because there's more people coming in, which creates a larger labor pool in those jobs where they're needed, and that kind of drives down wages because supply is higher. Of course, outside of California, because California's got it figured out, you just keep raising the minimum wage and you kind of like create some kind of socialist system, and everything's going to be okay. 4-year-olds can choose their gender. Um, so if Trump comes in and then deports everybody, that's then like that's super inflationary. Is that right?
I mean, I think there's a good chance. Yeah, I mean, look, so like again, I mean, it's helpful to sort of break things into two pieces, like because I think the conventional view of almost even taking a further step back, right? The sort of if you're going to be sort of standard anti-immigration, if you want to say, oh, they took our jobs, they're driving wages down, blah 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 blah,
Can you say
and
they
and
took our jobs in the way they
they
say it on
took our
South Park?
jobs. I can't do it that well, but yeah.
No, that's
Um,
really good.
Chicken sandwich, yeah, yeah, that's a good episode. But the and conventional sort of economics says, well, that's actually sort of not true because yes, obviously, all things being equal, increased supply should bring down increased supply of labor should bring down the cost of labor, but also there is the kind of induced demand where they come. They're also consumers. They create demand, and therefore they grow the economy, and it all nets out in a way. And there's a lot of research on this, and that seems to be the case. Is under normal circumstances, that the growth outweighs whatever headwinds additional supply might cause. Now that has not been true the last couple of years because it's just been a very sort of an extreme scenario where we did have this acute shock to the labor supply where these millions of excess so-called excess retirees and in that case like it's pretty clear and even though people initially were loath in this sort of style of our discourse like it's not happening, okay, maybe it's happening a little but it's not a big deal, okay, actually it's happening a lot and it's amazing, and how dare you question it kind of thing. That was sort of the narrative arc with immigration was I think it was first Goldman and then Barclays or a few other big names came in. It's like actually what, there are tons of people coming over the border and they've been very important to solving the labor shortage and actually and slowing the pace of wage growth, particularly in those low income service spots like travel and retail and waiting restaurants and things like that. But so and normally you would never admit that immigrants drive wages down, but under these circumstances when driving wages down is a good thing because because we have inflation, then it's okay to say. But it's not a narrative that really helps anybody because of course if you're sort of fall into the other side of the camp and you're opposed to immigration, you tend to be also opposed to inflation, you tend to be pro-growth. So like the reality is like the open border, whatever, the great replacement, it is real, it is pro-growth, and it's been deflationary. Now, yeah, so I think if it presents a question, like regardless of what your views on optimal integration, I think you're right that the current system is basically like optimized for lawlessness, where it's just like okay, you have a better chance of coming to the country if you just walk across the border than if you were like follow the process and try and do the legal path. That's just like a nightmare full of uncertainty. Whereas if you just sort of stroll across, like you get all laid in. No pun intended. But so if there, I think, I think it will be, aside from the sort of optics of it, I think sort of a big um, mass deportation, or would very likely be inflationary. I think it's hard to see it as not, like, and there are ways of um, there are ways, that it could, again, like, necessity is the mother of invention, right? The question is, how under those conditions, like, do we figure out other ways? Is it automation? Is it robotics? Do we get more efficient in other ways? Like, yeah, I think that's certainly possible. I think that's maybe an experiment worth trying. Like, I certainly think more so than we currently do. But yeah, it's hard to see how. Look, who I think whoever wins is going to inherit something of a mess, right? Like, things are not, the last couple of years have basically been catch up, and it felt really good because it feels like strength to catch up. But now that we're kind of all caught up, like, other than, I mean, AI is obviously, there's all bets are on AI, but like, otherwise it's, pretty substantial stagnation. I mean, again, healthcare has been a huge driver of jobs, and that's not really a growth driver, right? Like, that's just like getting a bigger nursing home is like, that's not a sign of strength. And of course, it's all paid for by Uncle Sam, and Uncle Sam cannot afford to pay its bills. So, like, that's a problem. And even, like, there was a story out in New York, like, where Governor Hochul is like, New York City's private, payrolls would be negative if not for home healthcare workers, which is technically called private, even though it's all, funded by, Medicaid expense. I'm confused on which one. Either way, it's all funded by the public fist. And there was just like a story the other day where, Governor Hochul's like, actually, this whole program of getting home healthcare workers to easily sign up, and it's become a scam, because, like, you used to have like TikTok influencers who are like, I could get X number, $35 an hour just to spend time with my grandma, which is honestly like something I think is probably worth paying for. Like, that's not a bad thing in my view, but it gives you a sense of where things are at, which is just like, we haven't there's not a lot of growth. Like, and there wasn't, frankly, back in 2019, 2018, things were already slowing down a little bit. So whoever wins, is going to inherit, or may even come before then, just like a fairly tenuous situation where we have rising unemployment. Is unemployment necessarily going to spike? I don't see any reason that it will, but like, it doesn't, it's not a very exciting picture either. And so, yeah, I mean, if there was to be I think a big mass deportations, I think that would probably contribute in the short run. It would be a pretty big shock. Yeah, and I think there'd be and that's coming back to the first observation about why the immigration system works the way it does, is like, because the reality is there is demand for low income service workers. There just is, like, to do certain work in meatpacking, restaurants, hotels, like, and so there's kind of like, we get what we want. And I think that that's part of why it persists, is just because, like, we have needed them. We have relied on a steady flow of of those kinds of workers to sort of keep things going, rather than either try to acknowledge we have a problem, or face it down, or do other things, like invest in, like China's doing, invest in robots and automation, or baby making, which is, of course, I think, the best solution is to start making our own replacements. But we seem to be culturally I don't know, turned off to that idea.
I think the baby making is, this ratio of child to parents is a problem that's causing, the potential long-term population implosion across the world, but particularly China. And the standout that I wrote down, because you mentioned that there's a secular problem of an aging population that causes inflation. And to me, I think, like Japan, they've had this problem forever, and they did everything to try to create inflation, and they couldn't do it. I actually don't know what their inflation is today. I think they finally got it above 2%. a couple of years ago. I don't know where their inflation numbers are right now, but it's like a very interesting thing. And I forget where they're doing it. It might be in Japan, but it could be. It seems like something Singapore might do. But it was one of these countries geographically. There is like paying money to make babies. I don't know if you I don't know if you know who that is.
Yeah, there's a few of them. I mean, I think Hungary's tried some stuff. Poland is trying some stuff. Japan, I think,
Poland's
has some stuff.
amazing. Can we just
Yeah,
pause? Poland's amazing. I like it is this like little darling of Europe economically, socioeconomically, and their future is bright. I'm long Poland.
yeah, Poland, Hungary. I think there's something there. And even Japan, like, look, you can make the argument is like aging is just it's just a it happens, right? We all get old, and like having it, having the age curve turn against you is just sort of inevitable insofar as like you're gonna have it's gonna be a little cyclical. Um, there are gonna be some lean times and some fat times, but it doesn't mean they at a certain point the older folks do get older and they pass, and then all of a sudden your age curve can look healthier again. Um, if you are patient enough to the, I mean, it's true, like,
Wait,
and maybe
no, no, no,
that's
no.
yeah,
Not if there's a. I'm sorry for interrupting you, but like I
yeah.
also like not so sorry. We're friends. Um, but if the trend, so the trend of this like the population trend is a symptom of less babies per family. So as long as the baby per family trend continues, uh, all the old people you want to die, Moses, super dark, could all die. But that as long as that ratio persists, the problem exacerbates. Except for in like these in like interesting developing countries like India or Israel, where it feels like everybody's 25 years old and in tech. Um,
Right. So it's two things though. I mean, first of all, it is just like you look at the aggregate number, which is a function of how old people, right? Like a younger population is just going to have more babies because there are more people who are in that baby making age, right? And it's also a question of how many babies the would be baby makers are making, and both are true, right? Like we have people who are you know of baby making status are making fewer of them. They're marrying less, like they're marrying later, right? We've seen the sort of the delayed launch kind of phenomenon. In some ways, actually, there's some data that suggests that it's the having babies later that explains most of the variance, right? It's like actually the people from 25 on or 30 onwards are still having about as many babies as they did before. It's the younger people younger than that where it's really fallen off. But I guess you could make the argument that like part of the downward pressure on family formation and things like that is just this large burden of caring for the elderly, right? Which is not, again, it's a labor of love, ideally. But you see it all the time where kids living with their parents, or it certainly can be a cost burden. Japan certainly has a pretty robust culture, of that, and like you could certainly imagine a scenario where as that burden fades, where your age pyramid, instead of being really fat towards the top, starts getting a little leaner towards the top, that it could encourage different kinds of behavior amongst the younger generations, and I don't know that. I mean, I don't know if there's any data on that, but like the
Peter's
only point is yeah,
Zaharian, what's his name? Zarin. Did you read his stuff? It's like the end of the world is near type things. It's
yeah.
a lot of upside down pyramids.
Exactly.
He's
Yeah. I mean, I know. I think I've probably seen it. I don't know that I've read the end to end, but the only point I'm making is, and I'm just trying to like think through some alternatives. Is just to say, okay, maybe Japan and China are going through their lean year period now, but perhaps they emerge stronger on the other end, or something like that. I don't know. But like I get it. I like it's annoying to me. When people look at China and they're just like, oh, China, they're not stimulating their economy enough. And like, it's just like, what a mystery. And everything's just, fluffed up with debt. And it's just like, why, why is it so different than us? Right. I mean, they're a little further along the age curve. We also use a lot of debt to finance asset prices. And like, and yes, the big difference between what they've done and what we're like, yeah, we injected another 2.5 trillion into the consumer economy for people but that's not necessarily a good thing. Like that, that's not sustainable. We can't keep doing that. So it was like, I think it's like it's
I don't know if that's the sorry to interrupt. I'll
yeah.
apologize every time I do it, but it's not going to like fundamentally stop me from doing it.
No,
I
please.
think the big difference is from my perspective, and there's a few because China has a couple competitive advantages over us, but and we have a few over them. Right, I think like fundamentally we're culturally innovative, but the U.S. dollar is still what everything in the world is pegged to, and as long as that's the case, um, our ability to create money and debt and everything around it is it's it's just separate from what everybody else can do.
No,
I,
that yeah, I totally. It's not like there are lots of differences between the two countries, et cetera. It's more just like people are very sort of understand
yeah,
like, oh wow, China's in trouble because the population is declining and they're getting older and they're levered to the gills, and it's like, okay, now transfer those learnings over here,
yeah,
and then it's
yeah.
like, no, what are you talking about? There's no way.
No,
Like,
no, no,
yeah,
no. This is
yeah,
America. This is
yeah,
America. Uh,
yeah.
but isn't I don't want to like stay on the baby making subject because I was going to ask you about like real estate and bank balance sheets and
Do you need me to tell you how it's done? Is if that's what you're, yeah.
how many babies do you have?
I have four. Well, they're not all babies anymore, but yeah.
Attaboy.
Yeah. How
Attaboy.
about how about you?
I
How about you?
I've got two. I've got two. I'm at like a clean ratio. I'm not the right thing to do for America or the Jewish community would be to have at least one more. Um, but I feel like I've got like a pretty well behaved, like not really well behaved, but I've got like two decent little humans. Uh, so I don't know if I want to roll the dice, but isn't
I think that
uh,
means you have
it,
bandwidth for an indecent one.
there's well, you know, my wife has certain mechanisms to convince me, of whatever she wants to convince me of. Uh, but I would think that having less babies is probably, I think, I could be wrong, but I think it's probably a bit of a function of developed economies, education systems, like liberal, not like woke DEI liberal, like uh, um, but like individualistic type values where I want to work more, I want to travel more, I want more independence. It seems like it makes sense that a family might wait longer to have kids or have less kids, whereas in less developed countries, um, and and perhaps where there's more religious communities and less television, uh, and in some cases less education, uh, there's much more multiplication.
Look, at some level, that's obviously correct. I mean, even to put a finer, I think it's just having women in the formal workforce, and I hate saying, you know, raising a family is a tremendous amount of work, as well as like building a household and actual community building, all of those things. So I hate the moniker stay at home is or not working versus working, as though raising a family is not a ton of work, because it is. But like the shift towards, let's call them W-2 careers or things like that, um, is obviously something of a headwind there. Like, it has to be, just from a sheer opportunity cost. Like it's yeah, for the same reason that having kids is in fact a lot of work. It's great work, in the sense that all there's nothing worthwhile that doesn't involve a lot of work. But you can't do two very intensive jobs. It's hard to do two at least at once. It just is, and but that being said, like there are some exceptions, like certainly, like again, like Jewish communities, Mormons, although their TFR has also been their fertility rate has been going down a little bit. Certainly less. There are so to speak, moderns who have bucked this trend. Certainly Catholic communities as well. It's pretty high correlation with religion. But even so, let's say fine. If one of the obvious trade-offs to a more liberalized workforce and Does that just sort of resign us to our fate? I mean, I don't know. Like, I don't think so. That seems unlikely. I do think that there are other things going on there. I think that there is a broader cultural malaise of just like where people like, I've analogized, the scene in the movie, all the old movies with, from medieval periods where like, the threat is always like, we're gonna make you the last of your line. We're gonna kill you and kill your firstborn males, and like obviously it could only be one firstborn, but you get the idea. And like that doesn't seem like like it's not a threat to people. And they're like, oh, I'll be the last of my line. Like, oh, I don't care. It's like that's kind of weird. Like the idea that you have no desire towards posterity, and like this idea that you want to. Even here's a stupid analogy. It was like watching, the show Alone, like the survival show last night, which I happen to really like. And like one of the guys just has this sort of simple throwaway line of like, I like to be out in nature and do bow hunting, and I look forward to when I can teach it to my kid and when he can teach it to his kid. It's just like this very simple sentiment of like, living forever through children and passing, being a link in a chain. It's just like it just doesn't, that's a cultural thing, and it doesn't seem to be operating well at a lot of levels. And whether that's a necessary part of modernity or whether it's something that we could sort of tinker with and fix, I think that's an open question. But yeah, otherwise, the future belongs to the Amish and the Hasidic Jews and sub-Saharan Africans. It's going to be great. Yeah.
Okay, a small pivot. Real estate, yes or no?
I've heard of it. I'm more of a metaverse guy. Like, I think that's where the real opportunity is. Some real distressed plays
You
there.
remember that?
It's
Prices
amazing.
are distressed in the metaverse.
There were like, multi-billion-dollar companies, on paper that were like that, they were selling real estate at the metaverse, and who knows, maybe they'll have the
Bro,
last laugh. But
Zuck
that was like,
renamed his company. Like one of the smartest, most successful guys in the world just went in. But it's like what was that game that we played as kid? Or I don't know if we're the same age.
SimCity.
No, Pogs. Or was it Pogs? Was like little round things.
I do
They
remember
were.
Pogs. I never played it. It never made sense to me. I didn't
Oh
understand.
no,
I also didn't have friends, in case you can't tell. So like a collecting game like that would have been, a very limited use to me.
because of the social component of it.
Yeah, it would have been like me trading with myself. Like I would probably, I would have been. I don't know if that would have been fun or not. Probably not.
How comfortable are you now in this highly social conversation? There's two of us. Are you an introvert?
Um, I I think so. I mean, I don't remember where I read it, but like somebody was basically saying is like introverts aren't. I'm not introverted about the things that I like to talk about, like this kind of stuff. I will talk to anybody, about their business, about macro, about investing, about, I may not remember their name, but I will remember those kinds of details. But other stuff, I'm like, I don't, if I don't feel like I have a lot to say or have a lot to learn, then, yeah, I'm not a natural. I don't, I'm not. I don't know. If an introvert is the sort of person, I don't know. Extroverts like attention or constantly thrive on the presence of others. Yeah, I'm not that. I,
I think like
yeah.
I think I think people generally think I'm an extrovert, um, and that's the feedback I get. Uh, and like I've done like a lot of these personality tests. I think I'm like an INTPJ. I think that's what I am, from Myers Briggs.
What's the
But
P? You added a letter
uh,
there.
no, I think it's an INTPJ. I think that's what it is. I can look it up.
I've got INTJ a lot. I don't remember what the P is though. I don't remember that.
I don't know, but I did it on 16 personalities a few times. I always land on the same results. But I read a book, or like in my case, I read like somewhere between like 40 to 70% of the book because that's pretty much what I do. Oh yeah,
I
you're
mean,
right. No.
40% of the first chapter. Yeah.
I'm an INTPA. Anyway, and I could, I don't know what the P stands for. Intuitive, thinking, prospecting, assertive, and introverted. I'm 76% introverted. But anyway,
Yeah.
the way the book talked about it was like where do I gain or deplete energy? So like if I'm in a social situation, I could do very well, even though I'm like having an anxiety attack going into it. But I could perform really well, but then like I'm totally drained and I have to refill my tank. And refilling my tank is like me being alone. At the gym, taking a walk, in the sauna, just like at a cafe with headphones on, not listening to anything, just so nobody talks to me. Um, so I don't know.
Yeah.
Not not okay. So where's real estate going? Is it doing well? Is it doing bad? What's real estate? Is it residential, office, commercial, industrial, hospitality? Just like bulk it into one thing. Like, um, what do you think? Somewhere between 1 and 74 sentences on real estate.
Um, yeah, let's try. I mean, so like I'm gonna right. So of course it matters which asset class and where and what you're talking about. I mean, I think let's so with commercial real estate still seems like a dumpster fire. I mean, you have probably a closer view of that than I do, but like
I do.
even if there is some some small evidence that maybe we've hit trough in some of the somewhere else, like office still seems to be trading more. There's still more debt that is coming due. Still more refinancing that has to be done. It's just like it's a combination of secularly overbuilding or building a ton in the interim, post global financial crisis after not building a lot, but then there was a ton of office building built. So a lot of new supply coming online. Then you have the craziness of the zero interest rates and in the 2021 22 period, where asset prices get reset extremely high. And then you have an actual demand shock where it's just like work from home has fundamentally changed the demand for office and what it ought to be, both just like how much of it you need and where, if like in central business districts, but just the idea like there was a lot of factors pushing against some of the old people hives, as I like to call them. Where it's like, well, everybody's got to come to work, so we're just going to stack a lot of people, and and we'll be great. So if you want to look at the bright side, like there is for the newer, certainly like New York City, newer Class A stuff, like Hudson Yards, financial, like they're doing okay. There is a flight to quality piece going on. It's just like a lot of that older inventory, which again was probably somewhat in trouble beforehand. That's a whole other ballgame. And like what I wouldn't catch falling knife at your own peril kind of thing. The other and the really question is like do those losses stay self-contained or do they spiral out of control? I don't know. I mean, this is sort of one of those, this is not a surprise risk. Like everybody's seen this coming. Everybody knows it's been coming. The regulators are all over it. Banks are all over it. So the hope is that while it may take a few people out and you're even seeing some losses of like AAA rated tranches of CMBS, which is pretty rare. But that's still like the losses stay there and there's no cascading effects. And you only have a cascade if there's an oopsie of like, oh, actually, it turns out I'm way more exposed to this asset class than I expected. And maybe that comes. There's an interesting research from the Fed about like contingent exposure, like letters of credit, right? We all know like letters of credit sit as a backstop. They're breaking cases of emergency liquidity instruments. They're not strictly speaking loans, so they don't sit on balance sheet in the same way. But like sitting behind a lot of the private credit, the people who have sort of non-bank lenders who have stepped into this void, is a lot of these contingent liquidity instruments. So like if there was a massive breaking case of emergency liquidity event involving commercial real estate, you could see a lot of the banks get pulled in ways that they weren't expecting, or that that maybe others weren't. But that's sort of a bit of a tangent. In terms of everything else, like look, retail has been doing. Retail was underbuilt for a while, and like retail's actually been doing pretty well, right? I mean, vacancy rates are actually getting directionally better. Certainly there's some bad, some out of date malls and things like that or overbuilt stuff that isn't working. But as a whole, retail seems to be doing okay. I mean, churn is high, but churn has always been high. Suburban office seems to be doing relatively better, than metro, but again, not by much. Industrials, again, like doing pretty well. Much less volatility there anyway, but certainly if there's any exciting thing going on, there's data centers and all that related infrastructure. The BLS has now started counting data center related construction spend as a separate time series. So you can sort of see that move up into the right. And then there's like on residential stuff, it's kind of interesting, right? I mean, there's on the private homes, and this is something that's sort of wrote about and been thinking about for a long time, is like it's been very much a home builders market, right? Because I think real I think home prices are not nearly as high as the indexes say that they are. I mean, I think just because if you, and it's not that there's no conspiracy, it's just like nothing is trading, right? Like people are just not selling, and they're not selling not because they're locked in. The only people who are locked in by mortgages are the banks. They're not selling because there's loss aversion, right? Like they have prices are sticky, right? Their homeowners are anchored by a price in their head of what they think it ought to be worth, and nobody has the purchasing power, including themselves, right? People can't even afford the home. Nobody can afford to buy the homes that they themselves live in at the prices that they're now trying to fetch for them. And so nothing, on the existing home market, nothing really moves. And the only things that do move are like, in certain select neighborhoods with all cash buyers and who are able to meet that price. But I think, indices aren't measuring all the trades that don't happen. And I think those trades aren't happening because bid ask is just too wide. But the result of that has been like, home builders, because they're not in the asset appreciation game, they're in a volume business, right? They're out there to sell houses, and they have the ability to sort of control their margins and price to market. Like they've had a fantastic run, and they've just been crushing it because they're the only game in town. But if you look at what directionally their prices, their prices have, they've been building smaller units for less. Although even that, the less has tapered a bit. I think some of the big builders did their earnings, and the prices were about flat or even marginally up in a few cases. But and they use all kinds of things like rate buy downs and other ways to kind of disguise the actual price of the home, or like discount off the sticker price. But again, like demand for housing is what it is, and that didn't change. What happened is just purchasing power. Are there some markets like Florida, Texas that probably may have some interim pain? Yeah, probably. But like, that's also where populations are actually growing. And as Trammell Crow, I think, used to say, like the best part about real estate is that the stork is on our side. Now, that's of course the other more interesting thing is just on a secular, like that's no longer true in the aggregate, right? Like in other words, if that used to be true, like if you build something, eventually you might be a little early, but if you have time, like people will move in. Like that's another open question. Is just like, do we, if the population is not growing or not growing as quickly as it is, or certainly if Trump takes office, all of the population growth is basically migration, right? Like net population growth just isn't there. So if we bring that down, like, and we actually, the number of people who need roofs over their head does not grow, like that's sort of an interesting question for multifamily. We're in, and right now, multifamily built a ton. There's there's need to absorb the existing inventory, plus of course costs of interest and borrowing costs and labor costs have all gone up. So nobody's really building because deals just don't pencil. But I don't know if that answers your question. I think it's actually mostly fine. I think the interesting questions are like, how long do home builders keep up this incredible tear, and what does that look like? Does commercial office, just the losses there still stay self-contained? And then just over the long term is like what happens. What happens on the residential side, where if do we end up something like Italy, or talk about Italy and Japan, where they're just like tons of empty houses, just because the populations began to roll over, and that's not a great thing for demand there. Yeah, I don't know. Do you have a different sense of things?
No, I have a fundamentally similar sense. I actually, my first podcast episode, I'm throwing air quotes around that if this is just published in audio or if it's just a listening, but because I'm not sure that's what it was. I was in my car in the morning and I recorded a rant for 40 minutes about the repricing of commercial real estate, what it means and everything else. So you and me are aligned. Curiosity. Well, you mentioned Trammell Crow. I think it was them that had this great like guess as a compilation of memos from the crash in the 80s. Did you ever read that? It's one of my favorite reads of all time. It's
I
not
don't know.
published in a book. I'm going to send it to you. I have a PDF, and it's got all their letters, like going back and forth memos among the partners during the I think it was the SNL crisis, and it's just one of the most fabulous things I've ever read. It's literally on their like printed memo. It's very cool. I'll send it to you.
Okay.
You mentioned I want to be respectful of your time because I know I think I've probably already taken at least an hour. You mentioned uh,
I'm
like
good
this.
till 11. If you, yeah. I mean, I probably shouldn't go that long, but I don't have anything until then.
I don't know what 11 means in the
Oh, another
context
30
of
minutes
my
or
time.
30, another 35. I mean, yeah,
Okay,
I have time. Yeah.
yeah, fine,
Maybe, yeah.
fine. I'm not under pressure at all. Uh, you mentioned you, I forget the word that you used, but like kind of second order, and I'll just say like third order exposure uh, to commercial real estate, and your example was letters of credit. Um, where, when, do you have any take on where all the interest rate uh, uh, cap exposure sits? I kind of assume it's on life company balance sheets, like it, as they tend to do these things. And uh, more than that, like how much derivative exposure does JP Morgan have, and what's in there? I think
So,
it's
I
like
mean, what,
40 gazillion dollars or something like this.
yeah. Wait, so what was the first question? Where does the interest rate exposure sit?
Not the interest rate exposure, the interest rate caps. So this was like and you might not have an opinion on it, but it was, stop me if you already know. Actually, I'll just like say it. So there's like for anybody listening, there's everybody that took out floating rate debt in 2020, 2021, 2022, 2023. Even now they have the ability to buy an instrument that caps how much the interest you're paying can go up. So if you had a 3% floating rate, you could pay for a financial instrument that says that your rate can't go above 4%, and the bank still gets paid if your rate goes up to 8, 10, 11, 12%, but that delta gets paid by this.
I mean, who wrote
You
all the insurance, basically? Somebody was selling insurance against, big rate hikes. Who wrote it all?
or who kind of owns it, right? Because it's usually like if you're writing insurance or somebody that's reinsuring it. I just wonder where it all sits. I wonder if it all sits somehow with JP Morgan. Too big to fail, crazy derivative exposure. I don't know what's going on there. It's I think Jamie Dimon's Jamie Dimon. I think Jamie Dimon is the man and writes wonderful annual letters. I just wonder what's on that balance sheet.
Yeah, I don't know. And they're obviously a pretty well scrutinized bank, so it sort of would be hard to imagine them, hiding much, but you never know. Like, and I agree with you. Like, JP Morgan is just like, it's just, you know, they're the best fintech out there. They seem to just be operating at a level above. Um, yeah, I don't know. I mean, look, in some ways, the who's holding a lot of that, right? That was sort of the unrealized losses on bank balance sheets, which is mostly treasuries and real estate. Those are there, and the Fed was the one that was the bank term, the BTFP, the bank term funding program was the sort of insurance policy for that, which was just to say, look, I know these things are technically worthless on a mark to market basis, but we're gonna let you borrow against them, basically at par. Um, and that kind of worked. But it's again, like it's an interesting and clever thing whether you give the Fed credit for it, but they jumped on their own grenade, right? They raised rates, so they did a big rate rug pull, and they said, okay, we're gonna lend out all this money for free, and then turn around and be like, actually, you know what, that was a mistake. Now we're going to charge for it. And so they devalued everybody's assets, and then they just said, you know what, we're not going to do that either. We're going to pretend like they're fine. But it's amazing. That's what they did, right? It's like
No,
and it
it's
worked.
impressive.
Yeah,
It's worked.
yeah, but in terms of like who's insured, the interest rate exposure, I don't know.
Me neither.
I don't.
I was
I'm
curious.
sure somebody's there. Yeah.
I feel like you. For anybody that's only listening, Moses has a fabulous mustache. So I know we're on a bit of a timeline, so I've got like a few more questions. I really was going to go deep into bank balance sheets, but I feel like we don't have to do that. Fundamentally, they're all kind of insolvent, so that's that. And everything's going to be okay. So there's that also. Trump or Harris?
uh, I have so many thoughts, but I think I may have to pass for now. I mean, I know who I have a fairly high degree of confidence in who the lesser evil is. But yeah, I don't know. It's a longer discussion, I think.
Fine.
How
Who's
about you?
going to win? This
Who's
is
gonna
my
win?
show. I'll ask the questions.
Let's check Polymarket to see who's gonna win. I don't know.
I think Trump's is still has a big lead, but it'll be interesting to see how it plays.
63%. I think he's probably going to win. But I don't know. I don't have any special insight there other than what I gut and feel. But yeah.
Tell me about Random Walk, so that the 14 listeners, hopefully it's more than 14. Hopefully it's at least 15. But so that those listeners know, what Random Walk is, what's going on there. Pitch it hard.
Yeah, I mean, Random Walk is a is a daily newsletter, which is, I think, so. A friend described it as, what would happen if Matt Levine and Zero Hedge had a baby, which I kind of like. It is, it's thematic. There's a lot of macro, but it ties down to micro stories. It's really for sort of curious people and other econ brain nerds who sort of like capital markets in the allocation of capital, or even it's sort of written from the perspective of an allocator seat. It's just like, okay, what are the big thematic things that are driving capital markets forward, both in the near term, the midterm, and the longer term, and then tying them back to micro stories. It's not and then using a lot of data to do it, and trying to be funny about it and conversational, and then also trying to take a differentiated view of things, just like sort of fundamentally, or just like, if I assume that everybody's read the Wall Street Journal and Bloomberg and the FT, whatever it is. So like, I'm trying to say something that is not fully captured by the zeitgeist, or like if the zeitgeist is 40% allocated to something and I think it should be 25%, then I will say that. So it's a little contrarian, trying to be differentiated, and the other, I think, key element to it is a little bit of forced serendipity. Like, it's fun to learn things that you're not supposed to know, that if you spend 90% of your day heads down at commercial real estate and local markets, like, that's good, that's what you should be doing, but at least some part of your bandwidth is just like, I just kind of want to learn about, you don't want to be the fish swimming in the ocean, the old David Foster Wallace line, the two young fish are swimming by the old fish, and the old fish says, wow, the water's fine today, and the two young fish look at each other and they say, what the hell is water? You don't want to get like that, where you're so focused in your swim lane that you sort of lose sight and lose perspective of all the other things that are happening, which do in fact affect you. Like, you have a lot of, like, VC is sort of the perfect example of just like, these people generally don't pay attention to macro or the capital markets, generally, but like, obviously their world is just like, is been rocked by this stuff in terms of just when interest rates change and appetite for risk change, and it's caused liquidity to just pulled out of their ecosystem in ways that probably many of them still don't fully understand, although they're starting to. and that would be a thing where it's just like if you're focused on an asset class, it's still helpful to sort of know what's going on. So that was a very long way. I don't know. It's interesting. It's fun. I do write up, like, it's smart people who read it. I do some, interviews, and it's focused on some of the bellwether companies, migration, real estate, again, financial system, things like that. I try to keep it pithy and easy to read, and do new things. And a lot of it's also like strong opinions, weekly held. Like, I'll take a stand on things, even just for the sake of it. Even if I don't, I back it up, but like, it's not, I'm pretty open-minded. Like, I will tell you when I got something wrong. But I don't know, it's fun. I know people seem, I don't think there's anything else quite like it. So yeah, I don't know. What do
I,
you think?
I read it. I love it. I'll plug it in the notes. And when we put it on email and do all the things. Um, why why? So not. I was going to ask, why do you know so much? But it's because you're um, very curious. What do you read? So like
Oh man.
what do you read? Yeah. Like if you could, like, whoever's, besides Random Walk, like whoever's listening, like, what do you recommend to be like the two, three things they read, whether it's a regular thing or it's just a book? Like, do you have any interesting, like if you could only read one or two or three things forever, what are they?
One or two things take forever. I mean, so I do. I mean, I read a lot, and that's partly like it's the nature of the business. Like, and I have something of a routine. I read all the major dailies. Bloomberg, FT, Wall Street Journal. Um, in terms of like really good other newsletters, I mean, Bern Hobart writes the Diff is a really good daily on mostly on
Which
public
is that?
markets and the Diff.
The Diff. Got it.
Hmm. It's good. I mean, obviously, like we both, Tyler Cowen's Marginal Revolution is sort of like a gateway, is like a gateway drug for smart econ brain people with attention issues to the internet. I mean, it's just like there's just so much there, and so many things to click and learn about. Um, so those are great aggregators. Yeah, I mean, I think there's other like sub niches that I think are interesting, or people who are just good at writing and get their thoughts together, whether they write all the time. But those would be the daily things that I would go to. But other people, I don't know, like even like Placer, right? Like the location data, and they do blogs and newsletters. I think the quality of that stuff is pretty good. Like I feel like I learn something every time. It's not. Uh, yeah, I mean, like a lot of the alt data vendors, Earnest, Credit Card Data, they also do a pretty good job. Trying to think, Patrick McKenzie, if you sort of interested in um, how financial, like sort of like the plumbing works, and like say payments or check issuing or credit, like he's just very thoughtful and informed on some of the plumbing of complex systems, particularly in financial markets. He's a pretty interesting guy to read. Um, but a lot of it, I think Twitter. You should follow me on Twitter. Like I curate a pretty good feed, I think, for myself. And there's a lot. Obviously, signal to noise on Twitter is always a challenge. But like, they're smart people and they put out good stuff.
What's your Twitter?
And
So people can
it's my
find you.
name, just Moses Sternstein, all one word.
Got it. Cool.
Um, and I think that's like a good top of funnel of just like, this is what people are thinking about. Is it worth you still further investigation is always opportunity. But also, it's also pretty good, like top of funnel research thing. Like if there's just like a name that you've never heard of and you just sort of like want to see what's out there, like it's a pretty low cost way to kind of, I don't know, to learn at least at a high level where, what's interesting. And then you work outwards from there. It's never going to get you to the bottom of things, but like it is a pretty good, it's a pretty good way to start, I think.
Well, I love your newsletter. One last question, and this is not as you know, because you've been prepared for nothing. By the way, like when I'm invited onto a podcast, I get these like wonderful professional things where they're like, "Here's some questions. What questions do you want me to ask you? You could send us here's the question we're going to ask, and here's like 7 answers. You can use any one of them." And in this case, I hijacked you in the morning and gave you no data. So in line with that, you've got 4 children, and if you could only bestow kind of one message upon them, uh, like what is that one thing that you want them to know? Besides that you love them, because I mean, I'm assuming that you do.
Depends on the day. No, yeah, of course. What's the one thing? Oh man. I think that I would. Yeah, I mean, I think somebody, it's so, you know, it's okay to be wrong as long as you're learning. I don't know. Like, I feel
I
like
like
there's
that.
yeah, I try to, it's part of, or you ask how I know things or polymath. It's like part of it is like, it's this, I have a willingness, I have a belief that I can learn things that I have no business learning and get dangerous in them, but I also understand implicitly that I don't actually know as much as actual domain experts do, and like you just kind of have to be willing to ask questions and make mistakes and be wrong about things, and then as long as it's kind of constructively being wrong, you can conquer new frontiers, I think, or at least show up. I don't know, conquering, but yeah, I don't know. I think that's kind of like there's a I think this sort of fear of failure and loss aversion, things like that, probably run a little
Yeah,
too hot. So it's just like I think being constructive about failure is an important skill, I guess. I don't know if that's a virtue necessarily, but yeah.
I like that. I feel like the thing that the one value I really want. And there's so many, right? But like the be a good person, blah blah blah. It's like super important, right? Like be nice. I think
Sure.
these things are really important. But like the one thing I really want my children to have is curiosity, and just ask. Like when my children ask me why, I will sit for an hour and answer every one of those whys until I run out of answers. Um, but anyway, Moses, this was super fun for me, uh, and a favor done by you. So I'm very grateful. Uh, thank you for doing this with me this morning.
Great. It was fun.